In today's video, I'm about to show you the real market structure, when the market is in a reversal and when should you continue trading. I can guarantee you this is different from any other market structure lessons you might have come across out there. This is the game changer. Pay attention to the end so that you will not miss a thing. And I'm going to show you why you have been failing as a trader, why your fancy change of character isn't working. But at the end of this video, that will become history. Pay attention to the end, because if you miss 1 second, you are going to miss out big time. Now, I'm going to start with a simple illustration of market structure so that your eyes can see them. Then we are going to go to the complex structure, the way the market is in the real life. But if you don't understand this simple illustration, then it will be very difficult for you to understand the real market structure in the live market. So we assume here the market move from this low to this high. Once this high is taken, okay, we have a higher high. There's nothing wrong there. This high produces low. This low produces high. Higher high, higher lows, higher high. Why is it higher high? We have break of structure here. So once this low takes out this high, we have a BOS, a break of structure. And then price produce a new high. From there we have a retracement. The pullback here is simply called a retracement or a pullback, or some people call it correction leg, because when market expand or go impulse, it needs to correct, and that's how the market moves. So from this low, it created this high, creating a break of structure, created a low, move up again, creating a break of structure. Now this pullback does not necessarily have to be a very deep pullback. It could be very small pullback, okay? It does not need to be 70%, okay, retracement. A pullback is a pullback. And there's nothing like valid pullback. I saw a comment asking me what is a valid pullback. I don't know where you get that from. There's nothing like valid pullback. A pullback is pullback. What happens as a trader, you simply give yourself rules, okay, to tackle the market and have an edge in the market. So more on that later. So we produced a high, a low, and then we created a higher high. Now this is where most of you fail as a trader. When you have this higher low broken, that is a chalk. Now in your mind you would think that the market is bearish. You look for trades in here, order blocks, fair value gaps, mitigation block, breaker block, supply and demand. You look for a point of interest in here to short the market. That is wrong, okay? Because you simply have one leg break of structure here, one chalk here, and you think this entire bullish circle will be over because of that. Think again. All this while we have been bullish up till we broke this low, and in your mind or in your head you think that this is a break of market structure. No, think again. This is what I'm about to show you, okay? You look for a trade in here, you set your limit order and the rest, you come here and you sell, and what happens? Market takes you out immediately. Even if you go to a lower time frame to look for a confirmation in here, you will get it. You will get the confirmation, but however, the market will still take you out because you don't understand how market structure reading is. That's why in this video I want to share it all with you. Now, because we have a break here, what it means is simply an early indication, because market could treat this as a liquidity inducement. You don't know where the inducement will be, but you see everything on the market as inducement, okay? This is an inducement. This is an inducement. This high here, every high and lows in the market are inducement. There's nothing like valid inducement. When the market pull back down, market can decide to treat this as an inducement. So if this happens and you took a loss here, because normally at every pullback you look for trades, okay? Every pullback you look for trade. Every pullback you look for trade. Now at the pullback at this extreme, it's not natural for you to look for a trade in here. Remember, you have been profiting from this bullish move up until now, definitely you have some steady win rate or win ratio. Now, when this takes you out, if for example, if for any reason you took a trade here, there's nothing wrong. You are not wrong to have taken a trade here, but it takes you out. That gives this other point of interest a better opportunity to continue going higher. I would rather trade this against this chalk here. I will trade this against this chalk, because most times this point of interest, other block in here, will supersede this chalk being produced, and that is where most of you fail. This could be its own kind of setup for a trade, but market, if you wait for this kind of setup, you are going to wait longer unless you go to a lower time frame and then you look for something like this. But applying the knowledge I'm about to show you here, it works across different time frames. It works across different financial assets, stock, crypto, futures, forex. You can use this to trade any market. So when price mitigates this point of interest here, whoever is selling here should go home, because market will take it. I'm going to show you on the chart, so don't worry about it, and do not say, oh, I'm cherry picking. No, you can go and check on your own. My duty here is to show you what I think the market is doing. It's your own duty. It is your own duty to go and back test. Do not take my word for it. So when market comes back down here, you buy here. So this now acts as an inducement. Okay, then once you buy here, target this high, because this is not yet a valid or a real market structure shift. Market will move on and then continue. Now the question is, Raba, how can you tell when the market structure has shifted? The answer to that is when this particular low is gone. Okay, you have this low that produces this high that has been taken. You see that high that has been taken, you are going to trace back the original low that started it, not the internal lows, because in some instances we might have internal lows in here. Okay, you might have internal lows here, not the internal low that created it, not this one, but the original low that started it, which might be from the higher time frame, depending on where you're looking it from. So when you look at that higher low, in this case, you want this higher low to give way. Okay, once this higher low is being broken, then there's a 90% chance that the market will reverse, and this is what you should be looking for each and every time. Do not start looking for chalk. Each time you see chalk, you will enter and start looking for trade, unless you see chalk in the bullish side, because this is a bullish market, and you go to a lower time frame, or probably there's a chalk in the lower time frame, you can take that trade. That is where your chalk will work. Okay, for example, you want to take this trade, wait for confirmation, and then the lower time frame there's a chalk. Okay, this is where the chalk will work, and then you'll be able to profit from that trade, but not in form of structured shift, and you're treating a chalk as a shift in market structure. No, that is not correct. So for a market structure to shift from bullish to bearish, it has to take out the high or low that produced that broke structure. What that means is simply, for us to have a shift in market structure, we have this to go, because this is the broken high, and this low that produced it needs to go. So you simply put a mark on that low and monitor it. When price breaks that low, then you have a shift in market structure. Now, before I go to the bearish side, which is almost the same here, for a break of structure, you need a body close, not a wick. Now, let's look at the bearish side here. For a bearish structure, we have a high, a low, a lower high, a lower low. A lower low in the sense that it took out this BOS, this low, creating a structure, okay, break of structure. Some people call it market structure break. Whatever you call it, it doesn't matter. Okay, what matters is your understanding of the market. Now, it created a pullback. That pullback led to a high, which is lower than this. That's why it's called a lower high. From the lower high where it was broken, BOS, and so on, up until this lower high was taken. If this lower high is taken, that doesn't guarantee that the bearish market is over. It's not yet over. Alright? This could be a way of manipulating, because before the market reverses, it has to manipulate. There has to be a lot of manipulation. You see market creating what? Consolidation, sweeping highs, sweeping lows, sweeping highs, sweeping lows. Okay? This is it here. Now, once this market takes out this, normally you look for trades in here. There's no problem. Don't let anyone deceive you that you don't have to look for trades in here. That is an inducement, the first pullback and all that. No. You keep looking for trades because that's the high probability trade until it gives way. Once it gives way, that is where you start looking for trades in this unmitigated area here. Okay? Because this break of structure does not guarantee a reversal yet until market takes out that high that produced the low that was broken. The low that was broken, you trace it back. Where is the high starting from? That high needs to go, because this is a range. This is what? A range, a powerful range. This is structure range. Once the structure range is taken, regardless of what was created here, this is structure range that dictates the flow of the market, that dictates the order flow. Pay attention. This is the structure range that dictates order flow. And once that low, in this case a high, is taken, then it makes sense to start looking for trades from these strong lows. Okay? From these strong lows. And you can look for trades and continue going higher. Probably this gives a 90% chance that the bullish move in that particular time frame, the bearish move in that particular time frame is over, and it might trade up to somewhere to continue. Maybe that ends in a lower time frame, but the higher time frame simply needs to pull back. These are things you need to incorporate in your trading. Trading is not as simple as it is. I do my best to make it as simple because that is my mantra. Trading made easy. I want it to be easy as easy could be. Alright, so let's look at a complex situation. In a complex situation, we have a high here, low. Now, if you can see, this particular leg here, this impulse leg, what I want to show you here is simply, sometimes on the same time frame, you can have high and low, before this high is taken, okay? Before we took out this, you might have series of high and lows, and then we finally broke it. Where is the structure leg? From low, this low to this high is the structure leg. When you see a high that has been taken, right? When you see a high that has been taken, trace back to the original move. That is your structure leg. And that is the lower low. Not this, not this. These are simply, what would I call them? Maybe internal lows. Because these are in a lower time frame, it creates an internal structure going higher. Now, if this low gets taken, most people will say this is chalk and they start looking for sell, not knowing that this is the structure leg here. This is the original leg that created that move. And when market comes in here, it takes them out. They will be looking to short in here. Once they short in here, market just gives a reaction and then takes them out. Pay attention to the structure leg. The structure leg. That is the leg that broke the high. And if market needs to reverse after producing on that one, it needs to take out that structure leg. Okay? 2 times, twice. Like more of like a double break of structure. Now, market move up, took out this. Some people will be confused. Oh, this is a chalk again. It was never a chalk because we are still in a bullish move. So it was never a chalk. It's simply a continuation play. You take a buy and you move on. A chalk is simply when you are reversing. You are going bullish and then it happens for a reversal. Okay? So that's the difference between chalk and shift the market structure. So market came back down, move up. Now, is this the structure leg or this? My question to you, look at this chart here. Is this low? Is this low? Is this low the lower low or this low? Take a minute. You will say this low, you are dead wrong. This is not the lower low. This is not the lower low. This is the lower low. Now, does it mean that price will not come here and move up? It will, or it should. I will be looking for trades in there. Okay, I'll be looking for trades in there. But however, what your structural low helps you to do is to know if the trend is over. Okay, if market takes out this low, some people call it chalk or a shift in market structure. They call it BOS, shift in market structure, not knowing that this level is where the main point of interest is. This is the best point of interest for you to trade. Why? This low serves as an inducement. So if it gets taken, it's simply going to mitigate in here to move higher. So you have to pay attention. This is how the market operates. This way, the way it is confusing you right now. That is the way the market is. So it is your duty to pay attention to it and find a way to understand. I will go to the chart very soon, so don't worry. Now from here, market moved up, came down, moved up, give us a break here. Now this break, this is the structural low, not this. This is the structural low that broke that high. When you see the high, just simply trace where it came from. This is where it came from, not this one. Okay, this can easily be served as what an inducement, and this is where most of you get trapped in. You look for trades in there. There's nothing wrong as long as you have a blueprint. If you are looking for a trade in here, okay, probably you want the market to give a reaction and then you can scalp. Good. Scalping can work on any of these higher time frame point of interest in the lower time frame. Once it gives that reaction, you take it and you go off. But if you want to hold it for a larger push in price, then that's where the confusion comes in. Okay, that's where you start getting losses. Same thing with the bearish market. We have a low, a high, a lower low here. This high is the main high that needs to be taken. Okay, the same thing with this high. Not this high, this high. So this is where you want market to break. Okay, before you can start thinking of early indication of market structure shift. So without wasting time, let's go to the chart. Now this is EURUSD chart. Now pay attention please. Now you can see we have a push up here, break of structure here. First break, we pull back. Second break here, we pull back, and we have a third break. Now if you can see here, this is a swing point. This low was taken. Alright, this low was taken, but does that indicate overall shift in market structure? No, this is an early indication. Okay, where you can take your trades here. In this case, you can try to take your trade, but as I said, where you need market to take is simply this low here. This is the low you want to go. Now for me, I would have taken a loss here because I will be following the principle of a bullish push up until there. Now when it goes and gives me a loss, then I will know that the market has shifted. Okay, simple as that. And also, if I'm taking a trade here, I will take out some of my partials and see if market can take out this. A lot of things depend on what happens on the left. Okay, these are other things you need to incorporate in your trading. But let's move forward. Now market move up, break this low. Okay, we have a shift in market structure now. We created the high. The high broke this low. We have a break here. Okay, we have a break here. Pull back. Market came up. In this case now, some people will take this as a high. Immediately this closes at hope, they call it chalk, or this one they call it chalk, and they start looking for trades here. Once you do that, you get roasted. Instead, look for bearish trade, because the market has confirmed a bearish move here. look for a bearish trade to take this to the downside. Pay attention. Now this high created a low here. This low pullback created a high. This high created a low. The moment this gets taken, most people will call this a chop. Okay? Not knowing that they need to wait for this particular high to go. This is the high you want market to take. But as you can see, when market push up, it failed to break that high. And what happened? This is where I will be looking for trades. Okay? This is where I'll be looking for trades. Once I get my trading here, I'll be attacking all of this. Most people will be looking here, oh, we have some supply zone here, rally base rally, just because of one structured shift. No, that is wrong. And some will also be looking for other block in here. This is why you fail. It gives you a reaction. If you trade this in a lower time frame for a scalp, beautiful. There's no problem. That means you understand the way market moves. But if you are holding this for higher time frame, forget the daily here. It could be any time frame. What I'm showing here could be 15 minutes. It could be 1 hour. Okay. You look for trading here to get roasted. Okay. And that is why you keep losing. Pay attention. Do not do this again. Wait for double shift in market structure before you can start looking for that reversal trade. Now let's continue. When market took out this low, I'm teaching you here. Pay attention. When market took out this low, where is the higher high? Some people will mark here as higher high. Some people will mark here as higher. No, this is the high you are looking at. This is the structural high. That is the high that started the move that broke this low. So this is where you put it. So whatever happens here will not confuse you. If this high gets broken, I'll be looking for trades in here above. Okay? Because this might simply serve as what inducement for this unmitigated supply zone to work. So we have a low here, pushed up. This is a valid lower high. Okay? Lower high, it came back down, created a low. Now you can see here, some people will take this as what? A break of structure here, because there's a close above, and they start looking for trades in here. Yes, they got the reaction, but what happened? Market came down because you are fighting the trend. Why this is happening to you? Go flashback. You can understand that this is how you trade, and that's why you're losing. You are fighting the trend. The trend has changed, my brother. The trend has changed, my sister. Don't fight the trend. If you're looking for any trading here, let it be a scalping move. Okay, let it just be scalping. You are scalping the market for a better price entry. Yeah, in this case, opening price came in. I don't want to talk about opening price. Right? Now, the market broke this structure leg. Where is the high? This is the high that was produced. The highest high that was produced is here. Okay? That's the highest high that was produced. Not this one. Okay? All of this may simply serve as what inducement. This is the main high that created this leg. And it created a low here. When you are looking at a low, you are looking at a swing low and a swing high. A swing high is simply 3 candle, the middle, the highest. I've taught you all this. Swing low, 3 candle, the middle candle is the lowest. So once you form the swing low, you push up, creating another low. Yeah? Okay? Now, someone can argue, chalk. Okay? Not knowing that the market has not changed. Or you shift the market structure. What happened? Market attack that low. Market attack that low, creating a new break. Now this new break, this is the high here. Okay, not this one. This is the structure high that broke the low. Okay, and you want to be selling in here. Don't let anyone tell you this is an inducement. This is an inducement. Everything on the chart is an inducement. If you look at it as an inducement, you will not take one single trade. Take a trade. If it takes you out, you are not wrong because you are in the right direction. Look for another setup to the downside, and you are going to get the trade right the next time around. There is no trader that don't take a loss. Okay? Even if you are looking for a trade in here, that's what I'm saying. If I'm looking for a trade in here, because it is lining up within the right premium zone, it's possible for market to react from here. No one knows what will happen before this candle printed up. So if you take a sell here and it takes you out, that is good. You followed your trading plan. You followed proper risk management. You lose 1%, 2, 3, 4, depending on how many percentage you are losing. You take that loss and then you look for this place to take a trade. Take a trade here. Once you take this trade, and the market will continue, you target this low. Because a lot of people will be looking here for chalk. They call this chalk. Shift the market structure. But no, that's where you are targeting. Because the market have told you that from here, from this point here, that we are bearish. And we continue going bearish. You continue looking for bearish trade. Right? Now, this is the main eye that was created, the structure leg, right? This is the structure leg here. High, low. All of these are simply internal highs and lows, and they can easily be used as what liquidity. But that doesn't mean you cannot trade from that 50% level. Now look at this one here. Hidden base. Market tapping and move. So if market takes you out here, you decide to go in here, take your loss here, take your gain here. The same thing happens here. Someone will tell you, he knows right from the start that this is an inducement. How? No, nobody knows that. What we do is we trade based on probability. If you are taking a trade there, if you are not too sure, lower your risk. That's what I'm teaching you. Lower your risk in here, increase your risk in here, and move. Okay? Now this is the eye that was produced to take out this low here. Okay? Every other one here are internal high, internal lows. Now you are getting the gist. You gave a pullback. This is an high. Came back down. Pullback. Gave a low. There's nothing wrong for you to look for sell in there. Nothing wrong. Now, if you look for sell and probably takes you out and then closes above, don't worry yourself. All of these other flows here are where you should be looking for trade. Considering in this case, market didn't come deep. That's why you have to have a kind of zone that when markets start approaching that zone, you start hunting for your setup. Whatever setup you use for, maybe you are looking for a chalk in the lower time frame, fine. It will work because you are in the right side of the market. Now, but for other people, they see this as a change of market structure and they start looking for buy in here to reverse. They start looking for reversal. Whereas you are looking to take that low once you enter this market from here. Okay? Once you enter the market from here, you are targeting these lows. This is not shift the market structure whatsoever. Because this is structure high, not this. Alright? Now this one, this is the, what I mean is, this is the structure high where you want market to break. Remember, double break. This is early indication. When you see this breaking, early indication. If this high gets broken, then we have a shift. Then start looking for bullish move. Because you are out here doesn't mean you cannot sell in here. Okay? And don't say you are waiting for a retracement. No, sell down. When the market moves here, some people will be excited. But it didn't go far. What happened? Hidden base. Pushed it down. Now this is structure high. Traded this low. Pull back. Now market pull back. This low is still intact. This high. Now, so this is the high. We went up here. After this break, we created the high. Did this high create the break? Created the break. Some people were looking for chop in there. They were looking for chop. This is how you trade. That's why you're losing money. market took out that low and went lower. This is the high that needs to be taken. Okay. Now, this low failed to move up and this high failed to go lower. So when you start seeing signs like this that did not take the recent low that was in place, you simply mark that range. Okay. Now, when market took out this high, this is the high that created that low. This is an early indication. Okay. I will simply look for a trade above here. I want market to take this one before I start looking for bullish move. But as you can see, market closed above it. That signifies a break or a change in market structure. In this case now, I will start looking for bullish price action. Probably looking at the hidden base here to continue, or I look for trade in here, or it comes back down in here. This is where I start looking for bullish trade. Once I see this, I'll be excited. Oh, the market has changed bullish, and you can see from there we are moving bullish. So what I'm showing you here is for you to go and practice. It's not as I'm seeing it easily. It's because I've practiced it over the years. I trade it. Okay. Even though now I blend it with the opening price trading strategy, which increased my win rate as well. And with the opening price strategy, you can avoid some of these trades in here. Okay, because you can see it closes above the opening price here. So I wouldn't have been taking this trade. That's for another day, and you can see the rejection here. That's another day. So if you have any question, put it in the comment section. Go back, backtest this, and see as your trade improves. Do not listen to anyone that say, oh, this is an inducement. They know this is an inducement because it's the first pullback, it's the last pullback, it's this and that. No. Every high and lows are inducement. Like this one, this was a valid trade up until it gets taken. And some will say, I know it was an inducement. No. You don't know, my brother. Nobody knows what the market does. All we do is to put the odds in our favor and trade with probability. And in the long run, we are still in the game because we are profitable. So on that note, if you have not seen my video on smart money concept, you can watch it here.